AI investors, listen up. It may be time to pack up and sell your everything. Sell your NVIDIA stocks, pocket the profits, get out of the AI coins, run away. Crash in AI stocks is coming, and if a crash in AI stocks is coming, a crash in AI cryptos is coming. Well, that's according anyway to billionaire investor Stanley Druckenmiller. He's talking about stocks specifically, not crypto coins. But anyway, the crash he's talking about isn't the one coming in June when NVIDIA's 10-to-1 stock split crashes the price from $1,000 to $100. Okay, let's keep that simple. In this video, I'm going to explain what AI stocks Stanley Druckenmiller has sold, how much, and why. And he's an OG legend investor, in case you're not familiar with Stanley. I also want to share the eerie similarities between the AI bubble that's forming up today and the dot-com bubble that burst back in 2000. And stick around till the end of the video, of course, to find out what could burst the AI bubble as early as 2025. Now, over the past 5 years, NVIDIA shares have exploded from $42 to $1,000. That's more than a 2,000% gain. Billionaire Stanley Druckenmiller piled into NVIDIA back in 2022, around the time that ChatGPT launched in November of that year. But get this, he didn't even know how to spell NVIDIA at the time, but that didn't matter. He knew the thesis. He put his money where he thought the thesis was going with any new trend or technology. It's all about getting in early and going in hard and trusting your gut sometimes, and that's what he did. Fast forward to a year later, and NVIDIA's stock was up over 500% in 2023 alone and has become the third most valuable company in the world. That's crazy, man. The market cap now of around $2.5 trillion. Now that's when Druckenmiller knew, maybe it's time to bank some profits here. So he sold 30% of his NVIDIA stake in Q4 of 2023. And in Q1 of this year, he sold a further 72% of his stake, as well as NVIDIA call options, saying he's had a hell of a run. Take the money and run, dude. Why not? Who knows? He may even have completely exited his NVIDIA position by now. We'll have to wait until, of course, the end of Q2 to find out why, with the disclosures and all that stuff come out, if that's exactly what's happened. Okay. I wonder if that 10-to-1 stock split that's just been announced for June will change his mind at all. But look, it's not just NVIDIA that he sold. He also sold all of his Amazon, all of his Alphabet holdings in Q4 as well. So is this it for AI? Is Stanley trying to tell us something? Well, he's very, very clearly trying to tell us something, but is he right? Look, yes, maybe in the short term, but in the long term, of course, obviously not long term. Druckenmiller's very bullish as anything, he says, on AI, and he thinks it can be bigger than the internet itself. But he also believes that the market needs a big, fat, juicy correction first before its next move up. So don't worry, you didn't blink and miss the entire trend. AI is not going anywhere. This is just the first leg, and he's playing the markets. He's swinging it, but it ain't going to be smooth sailing. It never is. It never is. Druckenmiller said in a recent CNBC interview that if you bought the NASDAQ in 1999 and it went down 80% before all that came to fruition, that's not going to happen with AI, he said, but it could rhyme. He believes AI is very overhyped today, but underhyped in the future. Okay, to be clear. Now, it makes sense. As the saying goes, most people overestimate what they can do in 1 year and underestimate what they can accomplish in 5 years or 10 years. Saw a similar thing with metaverse. Everybody, metaverse tomorrow. No, it's going to actually take years to make all this stuff, guys. Oh, well, crap, we better sell everything then. The same is true when it comes to investor expectations, right? With any new technology, investors are out there speculating today based on, of course, future growth. And somewhere along the way, our expectations become much greater than reality. And this is a massive psychological lesson for all the crypto investors out here as well, okay? Same stuff happens. And that's how bubbles form in the first place. Crypto goes through massive bubble boom, busts, crazy cycles. Now, before I talk about how the AI bubble correlates to the dot-com bubble, because this is super interesting, you're going to want to hear this, I want to interrupt the flow real quick to let you know about the best damn newsletter in the cryptocurrency industry. And that newsletter happens to be my newsletter. It's called the Wealth Mastery Report. And every single week, my team and I are working hard to bring you the latest, the greatest, and the best insights happening in the market. We know how it is. You're busy. Wife, kids, dog, stuff, right? But you still want to stay up to date with crypto. You want to have something to read on the train in the morning to work. We're going to keep you up to date on airdrops, altcoin news, deep dives, NFTs, technical analysis, and much, much more. You can join 125,000 plus weekly readers and sign up for free using the link down below in the description or the pinned comment over on X. Thank you very much. Let's paint the picture. The year is 2000. Telecom companies are booming. I'm a teenager. It's good times. Revenue, profits, share price, everything's growing exponentially, including me at the time, until it all comes crashing down thanks to, of course, some shady sales figures from one company in particular, which was called Nortel. So vendor financing deals meant that Nortel loaned money to customers in exchange for business. And before these business deals had even been paid for, Nortel had already recorded those as sales. Now, as the economy started to slow down, Nortel had no way of following through on all the loans to complete the sales. And so the bubble burst. There you go. In October 2000, Nortel announced that it had missed its Q3 sales target, and the company lost 25% of its stock price in one day. The same happened again in February 2001. Nortel cut its 2001 earnings and sales forecast in half, and the stock price dropped to 33%. This could be a cautionary tale for some of today's AI companies. And we're not singling out NVIDIA here. Perhaps it's the unicorn in the room, right? And whilst modern AI companies are not doing vendor financing deals of the past, they're potentially getting themselves into some hot water still. Today, AI companies are buying equity in companies, and it's being speculated that the funds are being used to boost up sales. Now, Amazon has invested $2.75 billion in Anthropic, and NVIDIA has invested in CoreWeave that's now valued at $19 billion after recently raising another $1 billion from investors because AI is hot and everyone wants to put money in it. These are two of the most obvious examples that could enable these companies to help inflate their sales growth. That's because tech execs are mostly paid through stock options and compensation, so it's sales growth at all costs to push up the stock price and to keep investors hungry and also happy. When instead, all they're doing is creating an illusion. The emperor has no clothes. If the past is anything to go by, then if that's what's happening, it's not going to end well. Jeremy Grantham, an investor who predicted both the dot-com bubble and the 2008 financial crisis, he is also warning that the AI bubble is about to burst. He said the best guess is still that this second investment bubble in AI will at least temporarily deflate. Spoiler alert, by the way, another financial crisis might just be around the corner, and AI stocks, when that happens, probably going to be one of the first industries to get hit super hard. Tech always gets hit really hard. Are you prepared for that? Are you overinvested in AI and probably AI crypto coins at the same time? Financial crises have happened, of course, every 17 to 21 years for over 200 years in most Western economies with a mid-cycle crash in between. Now, if we take a look back at history, there was a global recession, of course, in 1990, the dot-com crash in 2000, the financial crisis of 2008, the COVID pandemic in 2020. So if history were to repeat, then that puts the world on a collision course with, on the cusp of another financial crisis in probably the next couple of years. And US is $34 trillion in debt and all the other stuff happening we talk about all the time makes it feel like that's more and more likely. Now, it could start as early as 2025 or 2026. That also places us right now in the most dangerous stage of the economic cycle, known as the winner's curse. These are the final few years of the cycle. The blow off top and everything is coming. That's the most speculative part, the wildest part, the part when you can make the most money if you remember to sell. And AI just so happens to be one of the most speculative bubbles that exists today, just like the dot-com bubble was in 2000. So it could be a dangerous place for investors to be, especially if you're not aware of what potentially lies ahead and you are getting into all this without a plan, just YOLOing into NVIDIA stocks and hoping for the best. Look, you don't want to find yourself caught up in the FOMO or the greed and leave yourself overexposed. Speculative industries like AI, obviously, they're very sensitive to economic downturns. Sure, groundbreaking technology, new paradigm of everything, but it doesn't mean those markets won't go through wild corrections. The same goes for tech stocks more broadly, and of course, cryptocurrencies. The trigger event for the next crisis is unknown, but once it happens, there will be a rush for the exit doors, and most people will be caught with their pants down. Investors will want to sell their assets before it's too late. Liquidation calls will come in, all the usual stuff, all the panic and despair and pulling of hair and gnashing of teeth. So keep your financial goals in mind. Don't forget to take some profits on these more speculative tech stocks, because what goes up eventually must come down. Just math, man. Any AI stocks you keep for the long term, make sure they are financially sound enough to be able to survive any kind of crisis, and make sure that you have the patience to be able to ride it out. Okay, that's it. Thanks for watching.